Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Jim Jackson, Victory Capital's Head of Fixed Income Portfolio Management from USAA Investments, which is a Victory Capital investment franchise. The VictoryShares USAA Core Intermediate Term Bond ETF, ticker UITB, and the VictoryShares USAA Short Term Bond ETF, ticker USTB, both just reached their 5-year anniversary. Both ETFs received 5-star overall Morningstar ratings based on risk-adjusted returns for the period ended October 31st, 2022. Out of the 403 funds in the intermediate core bond for UITB and out of 447 funds in the short-term bond category for USTB. Jim joins me to discuss the fixed income market and provide more context around the two ETFs. Jim, it's great to have you with us. Welcome to Trade Talks.
Thank you so much, Jill. It's a pleasure to be here.
Thank you. And UITB and USTB just reached their 5-year track record. However, USAA Investments has been managing fixed income for quite some time. Tell us more about that.
Yes, Jill, we have a 5-decade experience in managing fixed income. So we've been honing our research-intensive process since we launched our first fund in 1974. UITB and USTB basically take that process and put it into an ETF wrapper, and we feel that's the right place for us to be right now as far as product launches.
Both of these funds are active ETFs. Can you tell us about your approach?
Sure. Our approach is straightforward and focused. So we very much focus on our evaluating, taking, and managing credit risk. What we don't do is we don't make macroeconomic calls. We don't predict where rates are going. We think that is very challenging to do. We think the performance outcomes are binary, and we don't think that is a way to generate long-term consistent returns in fixed income.
How would you describe UITB's strategy?
UITB is a core bond fund, which means that for our fund, it has less than 5% high yield. It will have at least 35% U.S. govies, and its target is plus or minus 1 year as far as duration versus the Bloomberg U.S. aggregate. So the fund is an active core fund. So we think that at your core strategy, that there is advantages to that strategy being active. We think that overcomes some of the shortcomings that we see in the Bloomberg U.S. aggregate index.
I'm sorry, go ahead.
The outcome of this is that our fund has been a very strong performer. It is in the top quintile of its Morningstar Intermediate Core peer group for the 1- and 3-year period, and is in the top decile for the 5-year period, and that is as of 10/31/2022, out of the 363 funds that were in that category over the last 5 years.
So the inversion of the yield curve has been a big topic in the markets. Has this drawn focus to investors' attention on the short end of the curve?
Jill, it certainly has. So the Treasury curve has inverted this year, partly in anticipation of the Fed increasing rates. The end result is that while investing does involve risk, that investors can potentially limit the amount of interest rate risk that they're taking without sacrificing current income by adding short duration fixed income exposure.
And this year has been a challenging time for fixed income investors. How have UITB and USTB performed in this environment?
So they've both performed well. Both of them have outperformed their benchmarks year to date. And when we think certainly that this year has been one of the worst fixed income markets we've seen in almost 50 years. That also we think presents opportunities. So what we're seeing is that yields across fixed income are at or near some of the highest we've seen in the last 10 years. We think also on a relative basis to other asset classes that fixed income looks pretty compelling. So we think that right now is a pretty opportune time to add fixed income exposure.
Okay, appreciate the insight as always. Jim, thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.